Hi everyone. Today let's talk about political risk in the stock market and why it's being valued in. You can't ignore the geopolitical risk. So let's talk about it. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So geopolitical risk being valued into the stock market right now, what does that mean? This is absolutely uncertainty, and that is being valued in, which is very challenging to price it in. You can't put it in your typical spreadsheet or playbook. Political decisions are being made about the potential for growth, revenues, and the fundamentals of these companies. So how do we factor these kind of politics into your accounts? Let's see what they have to say here. And what they do mention is that it seems like every day we are seeing some kind of pop-up on social media about a potential election poll or tariff announcement or political drama that is centered to the plot line and is now being valued in and showing and absolutely pushing around these stocks on a daily basis. You just cannot avoid it, especially overnight. It's hard to stay in the market overnight, at least for me, because it seems like every day we're getting some kind of announcement, just like we had the big sell-off on the Amazon Apple earnings, and then we had the news of a Ukraine deal and China tariff talks, and that was enough to push us back into a bullish continuation. So you can't stay short. You have to play the trends, at least for now, and it seems like the trend could shift with a tweet or another news article from pretty much anybody at this point. Doesn't even have to be directly from Donald Trump. It could be from Elon. It could be Secretary Bessent. It could be the Chinese media putting out a tweet. And how does that potentially factor into the valuations of these companies and the business narratives? Well, obviously we know tariffs are going to cut into profit margins, and now you're going to have to start to factor in a little bit more of a risk premium for these companies, which means more uncertainty, and the valuations that people are willing to pay for these companies are going to be a little bit lower. On the flip side of that, you have the valuation of Tesla and Elon, which seems to be getting a little bit of a bump from that. They have perceived alliances in Washington. Is that going to be priced into Tesla, potentially giving it a little bit more of an advantage over the short term to potentially medium term, even long term potentially, depending on how it all plays out with self-driving and the robo-taxis, keeping out BYD, another potential competitor to Tesla. So I guess the takeaway there is it's not all negative outcomes based on this risk. Tesla is seeing a definite benefit. And then they lay out what risk premium is, obviously the risk-free rate, which is government bonds. What we expect the risk premium to be, we want to see an outperformance of 3 to 9%. But if we are seeing geopolitical risk, how are you factoring that in? Right now, risk-free rate somewhere around 4.5%. And now we have all of the uncertainty of tariffs, cutting government spending, regulatory shakeups, and of course trade wars. And does that drive us into a potential recession and not give us the soft landing that everyone was hoping for? That would be obviously a big detriment to markets, in my opinion, even from current levels, well below the previous low, in my opinion, as well. Tariff risks, like I said, continue to, and then tariff risks, the rising of costs overnight, impacting demand for sure. Green energy stocks probably not going to get the same support that they were under the last administration. Defense firms, even those are starting to see some potential cuts as the government wants to rein in spending, especially the fraud and abuse, where we have to admit there has been quite a bit of that within the defense sector. So revenue growth, S&Ps in 2023, 28% total revenue growth. But of course, we are seeing potential impacts to those. So what can we do? And really what they say here is if you have any kind of exposure to China, especially a company that earns 40% of its income from China like Apple does, you have to reduce that baseline, cut into their margins, especially with the tariff risk and restrictions on imports being applied overnight. So really what that means is you have to move out of these companies and reinvest into things that are a little bit safer, like companies that are potentially relocating to the United States, like semiconductors, as well as auto assembly plants, potentially moving back inside the borders. Ford is one of those companies that has a limited risk to this tariff environment because they do build a lot of their cars in the United States. They say here, don't forget bankruptcy risk. Not super worried about that for the companies that we're talking about on this channel most of the time. But if you have high dependency to overseas markets in terms of revenue or supply, specifically China, political focus, defense, healthcare, energy, or even tech, which has been quite defensive here recently. And then they say defense contractors, even they are seeing a little bit of a risk, which we do get Palantir this week, which again has a pretty big exposure to the US government and their government contractors contracts. And it's going to be interesting to see what they have to say about the current political environment. And then looking at fear and greed, we finished the week at a 43. We were at a 47 prior to that, but a week ago we were at a 35. So a nice little step up here. We're getting close to that 125 moving average on momentum. Strength also rolling up. Breadth really, really strong here. We talked about that on the Thursday, Friday. This is hitting some peak levels, expecting to see some rollovers because breadth is so extremely high right now. Put call ratio still elevated, but coming down. Almost looks like a head and shoulders potentially here. And then volatility continues to sell off at some pretty low levels relative to where we have been. And then look at safe haven demand. It's as high as we've seen it in the last year at a 13.95 over the last 20 days. Outperformance for stocks versus bonds. And then J&K, extreme fear with the move on yields that we saw on the Friday session. Moving over to the sentiment survey, you can see the bears are back in full force all the way up to a 59, not quite at the 1-year peak, but a big step up from the 55. So bears are still very, very high, which partly to me is why we've seen such a strong rally. The market is so bearish. It's just rallying against everyone as the bulls start to kind of swing in. We haven't really seen that. The neutral's getting squeezed, the bulls getting squeezed, but markets continue to rally, which is super interesting. Seems like right now it's just moving against everyone. Moving over to seasonality, May is supposed to be a pretty good month, and so far it has been. You can see we start to roll here at the end of next week into that 12th, 13th time period, and then we're supposed to be pretty much straight up for that May period when it comes to post-election. When it comes to those regular years, though, this is generally not a great month until we get into the end and start to head into that June time frame. So just keep this in your back of your mind. Are we going to get a post-election run, or is this going to be more like a normal year where it's flat to bearish? And then moving over to the seasonal calendar, you can see bullish for the FOMC meeting. That's going to be interesting, of course. And then we get the Friday before Mother's Day up 20 of the last 30. And then the week after starts to be a little bit more bearish for the 13th into that expiration week, expiration day. Moving over to the economic calendar for Monday, a little bit of soft data, non-manufacturing PMI, non-manufacturing prices. And then looking at Tuesday, pretty much nothing here except for 10-year note auction. Continuing to watch Atlanta Fed GDP. Came in at 1.1 on the previous for Q2, and this was super heavily negative for a little bit, and now this is starting to be just slightly positive. So is that more in line with what we're going to see? I think that'll be interesting to continue to watch how that evolves over the weeks. And then we have the big thing here for Wednesday, FOMC meeting and interest rate decision, expecting no movement there, but maybe we get some interesting comments or projections on when those cuts might start to formulate for the end of the year. They still want to do 1, maybe 2 this year, but we haven't really been able to nail down when those might be happening. And then for the Thursday, 30-year bond auction, and then really nothing for the Friday. Moving over to earnings for next week, you can see we're getting Berkshire over the weekend. We have Palantir. I'm sure a lot of you are going to be interested in that one. It's amazing to me that this is a $300 billion company. I don't really believe that it has any right to be that expensive, but it's going to be interesting to see what they have to say. Realty Income, a company that I do like quite a lot on the REIT side. Clorox, one of those staples that needs to do well. AMD next week as well. Duke Energy, Global Payments, SMCI. I'm sure you guys will be watching that one. Global Foundries, want to see how the semi space is doing. Are they going to lead us higher or not? Uber next week, as well as Disney. ARM, very interesting, another semiconductor. Want to see how they're doing. Really, we need semis to regain some strength if the markets are going to regain their strength, which has not happened so far. They've been mediocre at best. And then looking at Thursday here, really not much. ConocoPhillips, Monster Beverage, just fun to watch. Really not any plays in there. And then that is it to wrap up the week. You do have Federal Realty Income, another one of of those REITs that I do like to watch. Overall, pretty light week on earnings. Moving over to Max Pain, you can see Max Pain is lower at 544. The put wall is 540, so there's plenty of room for it to fall below 550 into this kind of 545 to 550 area. I think that is the most likely outcome for this week. Put call ratio still quite high at 3.8. Total options not a ton, but there is still a huge put wall out at 470, and really for 540 is the one that I'm watching. I think we could drift into this kind of range here. Moving over to the S&Ps here on the monthly chart, look at that month for April. It was a huge wick down to these major trend lines, ended up only down about 0.5%, which is wild. I would have expected to be much, much lower from there, but it seems like we've held up. And now we are starting to see a little bit of a bullish push already to start the May timeframe up towards that 9 EMA zone at 58.04.05 in that area. Right now, momentum still bearish. Obviously, very little volume here for the May timeframe. But on a structural basis, this is still very much a bull trend. We had a really aggressive sell, took a lot of this kind of a move, just did it really, really fast. Are we going to head all the way back down to that 55 EMA? On the monthly, I still think that is an absolute possibility. And we were just down too much, too fast. And now we're seeing that retracement. And are we going to see a continuation lower back towards that 21 EMA down at 53.43? I think that's a possibility as well. And then looking at it on the weekly chart, this looks more like a true bear trend where you have a big move down. We're getting that lower high set up in here. Are we going to go to the 21 EMA around 57.88 potentially? We are already a little bit higher than I thought we might go on this weekly chart. Do we go to there? That is the big question. But looking at it on that daily chart, you got the big 200, the big level there, 569.90, and the trend line here as well. This is the critical zone. This is where I think we are either going to resume this bear conviction from this level, or we're going to bust through back here, and then we're going to see a continuation back towards those all-time highs. I still think there is absolutely risk in the markets and in the economy, so my expectation is that we will see a breakdown from this zone into next week or the week after. But understand there are charts that say we could absolutely go a little bit higher over the short term. And then moving over to the SPY charts here for the Tasty charts, you can see that 8 EMA right there, 568.34, the big wick down to the trailing stop, back to that 8 EMA. Is it going to reject from there? 568.34 critical zone. As we head into next week, are we going to find rejection and head back towards that trailing stop all the way around the 490 area? That would take you back to the lows here from March of last year. And just to zoom out a little bit, structurally, this is a short-term bear trend. Is it going to become something more like this, where you have a couple of months of lower lows back towards that 55 EMA here around 464.57? I think that is a possibility. Obviously, a huge rejection here. Initial tests, in my opinion, and I do think we're going to head a little bit lower over the next couple months. And then looking at that weekly chart, I just want to highlight when we do get into bearish conditions on these kind of downtrends that can last quite a while here. You can see we got into it in February, and then we did not see a break of bear conditions until May of the following year. So this can last a long time. I do think there's going to be a pretty consistent down move in here. It's been super volatile. Obviously, we went down a lot really quickly, and we've now come back a lot really quickly, but overall, I still expect this to stay a bear trend, so no higher than your trailing stop there, 594.85. Hit that zone if we even got that high, and then reject from there. And then the most concerning chart for me, this is the daily chart. It did flip back to bullish conditions on the Friday, which was interesting, but look how much room there is back down to that lowest ATR band, 476.50. If you did start to see the bears take control at this 200 area that we talked about, then I would expect this to kind of continue back down to at least a double bottom. That ATR band down at 476 would be the target over the next couple days. So watching for that here on the daily chart. Structurally, like I said, still short-term bullish, but medium-term still bearish for me. Then moving over to the NDX here, you can see it's been bullish for April and then here for May, right back to this major key trend line. This is an important trend. I would expect a rejection from here. 20,215 is the current, and then you can see 20,102, the high already, 20,176. So we came up just a little bit short of that trend line. Momentum still bearish, RSI still bearish, still expecting this structurally to stay bearish here. And then looking at that weekly chart, you can see the same zone right there, that major trend line, the 21 EMA, 20,492. Do we have a little bit more room to get into that zone and then we start to see it sell here? It's hard to say, but that is a critical zone. Momentum continues to be bullish here, and then the RSI is back above the SMA. So it is showing some bullish signs for sure. And then looking at that Q's daily chart, you can see the 200 major level there, 489, 81. A lot of traders will say if we're below the 200, this is still bearish. If we're above it, that's still bullish. And I would argue we are still in bearish conditions. You can see just how extended we got. We're now retesting that zone. And we've seen this before, right? When we got into this 200, look at how much this sold down about 20%, just like we did. And then we rallied right around 15%, just like we did. Ominously similar, in my opinion. Rallied right to that 200. And then the next leg down was another 23% lower to a much lower low. So just keep that in mind for current. If we do see a very similar setup, which is what we have here, and we did go another 23% lower from here, that would take us well past these lows. Got to zoom out to even give this some context. That would take us all the way down into the 374 area. Again, who knows how long that's going to happen, but just keep that in mind. That would take you back to this kind of time frame here. Oh my goodness, there's a gap fill back there all the way back to November of 23. Are we going to look for that gap fill? Something to watch for over the next couple of months. Don't get too panicky if you are a bear in here. I think this is probably the zone where we do see that bigger rejection. Moving over to the Russell, you can see same setup here for April into May. We've retraced back to that 55 EMA at 201.13. Are we going to get back to the trend line here around the 203.37 area? Momentum still bearish, RSI still bearish here for the monthly view. And then looking at that weekly, similar setup. We did get back above the 200 SMA on the weekly chart. You do have the trend there, still waiting to see if we get there. 202.97 is the area for next week. And then you can see we're above VWAP. Your next resistance dynamic wise would be that 21 EMA around 211.59. Momentum still bullish, RSI back above the SMA. So again, looking pretty bullish on those structures. You can see the 55 EMA on the daily chart was resistance for that Friday session at 201.28. Still looking for that trend line. That took us right back to this consolidation low. We're right in there now. Momentum and RSI both still bullish here. A little bit of volume coming through on that ramp. You had a consolidation continuation into the Friday. Is this going to push us into those key levels like we saw on the SPY NASDAQ? And then we start to see that rejection from that key area, which does start to drag down the Russell. That is a big risk factor in my opinion. So watching this one here over the next couple of days. Moving over to the Russell here on the Tasty charts on the monthly, you can see we're right to that 144 EMA. For whatever reason, the charts here on the Tasty charts seem to be just a little bit more accurate when it comes to these zones of resistance. 144 EMA right there, that's what we touched at 201.47. We closed right at it, 250 cents right there. Is this the zone where we reject? Look at these ATR bands starting to roll to the downside. That lowest band right now is sitting at 178.99, so a little bit over $20 lower from here, another 10% move. And I think that is absolutely in play over the next couple weeks. And then looking at that daily chart, you can see that 55 EMA there at 266 cents. We closed just barely below at 255 cents. So critical level there. Is it going to roll from there? We watched it on the other chart. We're going to watch it here as well. Your trailing stop is still up at 205. So this is still bearish conditions. So a little bit weaker technically than what we saw on the SPY and the Qs, which are both back into bullish conditions on the daily chart. The Russell is not quite there. Moving over to the Dow, you can see the Dow has retraced pretty substantially over the last 2 weeks, up 2.5% and another 3% here to that 412 level, just barely above it. VWAP right there as well, 412.81. You got the 55 EMA there as well at 411.56. So we'll see if this zone continues to be a zone of resistance. You got a push right to this consolidation low, critical low here as well. Are we going to go just a smidgen higher to that 418 area potentially? Momentum bullish, RSI right there at the SMA. Are we going to see another couple of weeks of testing and then a breakdown. So like something like this into that mid-May time period, and then you see a roll to that kind of double bottom type structure. That would be interesting. But I don't think this move to the downside is done until we see a true bottoming formation. And I want to see a consolidation low here, pull back, double bottom or higher low setup in here, and then get a continuation higher if it's going to do it. Otherwise, I would expect it to cut through and push back down to these kind of 200 levels in that 350.92 area. Moving over to the equal weights, kind of that blend between the Russell and the Dow. You can see the 55 EMA in there at 173.05, right in the same zone as the level here. 21 EMA just above it, 174.50. Is this the zone where we reject and then push back to that 200? We already dipped well below it here on this weekly chart, well below that 200, all the way down to that 149.82 area. Came up just a little bit short of that level. You can see right in this kind of consolidation high, came right to that zone. Honestly, I should probably move the level up to this kind of 150.50 area. That seems to be the more important area. And then you can see momentum and RSI still slightly bullish here. Do we have a little bit more before we get into this zone, and then you get a lower high from here? Remember, you still are working off of this high, lower high in here. If you did come into this 175 area, that is still a lower high, and then you would expect a lower low to come. Moving over to the ratios, we did see the SPY underperform the Russell a little bit. Those have been flat really over the last 2 weeks relative to each other, but look at the NASDAQ, really, really strong. The Mag 7 held up really well through earnings. So far, so good on that. Amazon and Apple were the laggards, but Microsoft absolutely crushed it. Tesla didn't do so great, but their forward guide and potential has held them up pretty well, and that has been rewarded with the NASDAQ headed a little higher towards that 355 area. Momentum and RSI still bullish on that, so NASDAQ outperformance is the expectation, at least for now. Moving over to the SPX divided by the M2 money supply. This is a very important chart for me, one of the most important that I watch on a weekly basis. You can see we came down to the 200, came down to that critical support level at 22.05. That is the high back here from July of 23, as well as the high in November of 21, and then the same high March of 20 on a ratio basis. Touched that level, found a bounce. Based on this structure here, you would expect a little bit more upside into this kind of 26.5 area, 55 EMA, 21 EMA. And then if we did get a lower high setup from there, then you would expect that continuation lower, potentially through that lower low, which would be obviously very substantial from this level. Is a big sell very fast. Are we going to sell continuously from that level? I think that's a possibility. Momentum is still a little bit bullish. RSI is still a little bit bullish, but the overall broader trend is quite bearish. And you can see here, every time we get above this SMA over the last couple of months, really last year or so, has been a lower high setup and then continuation lower. I think this is probably the last iteration of that. We go back to oversold conditions from here, and then we start to see a little bit of a bottoming style, and then potential continuation higher from there. Moving over to the Mag 7 here, this almost looks like a head and shoulders pattern, and if that is true, this is going to be disastrous here for the Mag 7. You can see left shoulder, is this the head? Now we're coming off of this kind of neckline here. You can see really, really similar, came down to the same level, threw a big wick to this 230 level, just like here, consolidated and then rallied up. If this is a head and shoulders pattern, realistically, this 290 to 296 area should be the zone where we find rejection. And then if we do get the follow through here, that would be absolutely disastrous. That was about a $90 move from there. And then if we did get another $90 move, got to zoom out here even to show it from the neckline. If we did get a $90 move, that would take us all the way to the 150 area. If we're looking at it in terms of percentages, that's about 27%-ish. And then if we went another 27%, that is a little bit shorter, a little bit less around the 175 to 180 area, but that would obviously be catastrophic. And from current prices, it's even more, right? Because this is from the neckline, that's your price target. If we went from current into that zone, that's about 39 to 40% lower. So just keep that in mind. Is this a left shoulder head, right shoulder here on the Mag 7? It really does kind of look like it, right? You're coming into the zone of resistance on that right shoulder. Does this fade from here and then start to push lower? something to watch for sure. Moving over to Apple and Microsoft, these had two very different weeks. Obviously, look at that huge candle, 11% higher here for Microsoft, and they just crushed it on earnings and everyone bought the stock. They had a really good week the week prior, rallied into earnings, and then got a massive acceleration back into this consolidation area. Got to extend out this trend line here. We are technically a little bit above that. That's interesting. Is this the zone where we do find a little bit of a rejection potentially? Certainly a possibility. This structure is still bearish, but of course the earnings can give a lot of shift to the sentiment, shift to the technicals. And of course you are back above all the EMAs and SMAs, so that's interesting as well. You can see Apple here, not as fortunate, terrible earnings, down 1.88%. Honestly, it should be down more, but they said they were going to buy back a ton of their stock, so rejecting off of the VWAP, off of the 9 EMA 209.65. I think this probably goes back towards those lows over the next week to 2 weeks, which is about another 5.5% lower, and that would take you to this kind of 193.96 level. Momentum slightly bullish, but it's fading here. RSI very bearish. Every time we get close to the SMA here, rejection. Tried here briefly, rejection. We're here again. I would expect at least one more rejection. Moving over to Tesla and NVIDIA here for the weekly. Tesla was just slightly positive. Managed to stay above the 280 level. Momentum continues to swing. RSI continues to swing. This has already had a very long bottoming pattern. We were here from March all the way through to April. So about 6 weeks or so in this zone. And then we did get a nice little pop out of it. Is it going to push here to the 21 EMA? I think Tesla has potential to have some legs over the next couple of weeks. And really this has, like I said, it's kind of completed that bottoming pattern, and I do like that setup there. NVIDIA, on the other hand, this just continues to look terrible, right? So you had a long consolidation here. You've had a long downtrend here. Dipped, extended itself, hit these kind of lows. Now we're back into the same consolidation downtrend. We're at the trend line here. That would give you the expectation that we are going to roll back to the downside. The momentum and RSI do not really confirm that quite yet. But if we do start to see it roll from this zone, that 116.70 level, the trend line here, VWAP in there as well at 114.73. If this is the zone of rejection, that would take us back down another 16% or so. If we went back to the low, that'd be about 24% or so. So just keep that in mind. The risk is still absolutely to the downside, in my opinion. And it just does not seem like semiconductors are going to be able to lead us back to the upside, which means the broader markets, in my opinion, are going to continue to struggle. Moving over to Amazon and Alphabet. Amazon had terrible earnings, and then they somehow managed to pull out a positive week of around 0.5%. So he came down here, went to 181.41, found support in there, found the trend line, and now we've bounced a little bit again. Pretty long consolidation, 4 weeks in a row in the same area, really wide-ranging candles. Momentum, not great. RSI, right in that zone where you would expect a rejection, and I do think that that is going to happen. But even with that, we could see a little bit of a move higher into this kind of 55 EMA there, 195.93 potentially. And then looking at Alphabet, they had good earnings and they were only up. They had good earnings the previous week, so they had a nice week there, 6.8%, and then about 1.2% this week. Still cannot get above that highly traded zone right here around 167.16, and then the next level, 170.95. Moving over to Broadcom and Meta, you can see Broadcom was up about 6% almost, and then Meta 9.09%, really big push there. Momentum swinging to bullish. RSI right there at the SMA. It's going to hit that probably next week, so you have a little bit more room, hit these key levels, and then we're going to see if we start to see some rejections from these key areas in that lower high setup, and then look for that lower low off of that. It's been a really strong push, but can it continue? Are we going to continue through to the all-time highs? I just don't see that being the case with how much risk there still is geopolitically and economically. Moving over to staples and discretionaries, you can see staples had a decent week, almost 1%. Discretionaries up almost 2%. Momentum swinging to bullish. RSI above the SMA here. Is this going to be a rejection or not? Next week, it really has to happen next week. Otherwise, maybe this does have a little bit more legs, potentially to the 21 EMA. That would take you to 213. That would give you a pretty decent move, around 6%, a little bit short of 6% potentially. Otherwise, if we do reject from this zone here, back down to the lows, that would give you about another 13% down back to here. 200 SMA was support last time, 175.26 on the weekly chart. But structurally right now, you got a big dip low, nice consolidation bottom, breakout from that bottom. So technically still bullish, waiting to see if we get that lower high set up somewhere in here. And then looking at staples, really in the same consolidation range that we've been in since August of 24, and we are still here in April of 25. So anywhere in here really above 81 to kind of 84 is a sell zone. Anything in here between kind of 76 and 78 seems to be a bit of a buy zone. So watching this as a consolidation with no clear direction. Moving over to 20 and 50-day breadth, you can see 20-day right at those peak levels. We're above these consolidation highs. We got here once in August. We were there for 1 week. And then the last time before that we were here was November of 23. We were there for about 2 weeks. We consolidated a little bit below the level, and then we had a breakdown from there. So we're at these peak levels. 1 to 2 weeks is the most I would expect in this area, and then we're looking for at least a little bit of a pullback. And then same thing here on 50-day. We're right at the trend line, consolidation, lower high area, the same zone we've been in the last couple times. And then we ended up falling from that area. Do we see maybe a left shoulder head, right shoulder kind of in here? That would be interesting. So that would take you back to the 15 area, at least to the 26 area, I think makes sense. Either way, though, this is a clear zone of resistance. And then moving over here to 200-day breadth, not as high of a level as you would expect. We went right to this kind of 42.26 area. That is a key zone of resistance. Momentum and RSI still a little bit bullish there. We did get a really low level on the 200-day, got below this level here in October of 23, didn't quite make it to these kind of 11 areas in here, June of 22, and then again September of 22. That is where you start to see those really big pivot points. But if we're comparing to what we saw here, this June low was a really low level. We saw a nice little rally out, hit these key levels in here, and then we ended up going back down to that September low. Saw a nice higher low setup on the RSI relative to price, double bottomed on price, and then we got a really long rally out of that zone. So something to consider despite the aggressiveness of this rally, and you could still see another week or so of movement from this area here into this zone. We went right to that kind of 49 area. Do we have another leg higher into here? And then we see that bigger sell. Certainly a possibility. Just trying to look at some historical examples. 49 makes sense to me in this zone here, and then look for that bigger sell, double bottom type move back down to this 18 to 20 range. Moving over to the dollar here on the weekly, it's actually held up okay over the last 3 weeks. We got back above the 99.83 level on a closing basis, so that's nice. We tested it last week, got back above it this week. Momentum step into bullish, RSI oversold conditions. Do we come up, retest the SMA, and then sell off again? That's debatable, but for now, the dollar has found a little bit of buyers in this zone, critical zone, trading off of that 99.83 level, looking for 101.25. Moving over to JNK and TLT, you can see we did come up here to 99.84. We rejected off of there. JNK was down about 0.5%. Nothing crazy, but we did show a little bit of rejection. That is another lower high potential setup here. Do we see a little bit more selling on JNK? That could be interesting. We're actually back into this consolidation range where we spent a really long time, December of 23 all the way really until August of 24, so a long time in this area. Is that what's going to happen again? Potentially, but either way, I wouldn't expect it to stay at these kind of lows. If we did get anything below 91, that's an opportunity in my opinion. And then looking at TLT, similar here, we did go a little bit higher, rejected off that 89.16 area, and then looking for 85.90 to be support. Honestly, I would expect a little bit of a higher low here. This RSI is a little concerning. You can see the SMA was headed higher. We broke down, retested, and then broke down from there. That's concerning for sure. Do we actually go to a lower low, maybe back to 82.60? Potentially. Again, this is all short-term trading on TLT. Medium to long-term, anything below 89 seems to be a nice buying opportunity. Then moving over here to the VIX, we did break through all of these trend lines. I expected at least one of them to give us a little bit more substantial of a bounce, but none of that happened. 21 EMA is there at 21.25. That's going to be an interesting zone in here. Otherwise, momentum RSI still bearish. 20 level is the next major level for me. And this continues to be sell, and this continues to be a sell 4 weeks in a row. Do we get a fifth week? I would say probably. And then do we find some support in here? I would also say probably. Moving over to my accounts, I ended up making a little bit of money on the week. Not a lot, but a little. which is okay. I was down pretty heavily early in the week and I managed to make all of that money back and finish positive on the week. So fought out of it, which was good, and managed to stay positive on the year, which is also good. As I said, my thesis is I think we can get a little bit more push to the upside. Still short-term bullish, but if we reject off of that 200 SMA, that is going to be catastrophic. I think that means that we could see a move of 15 to 20% down from a potential 200 SMA rejection on a technical basis. So the risk is absolutely to the downside. Watching that very closely early next week on the NASDAQ as well as the S&Ps. I think we potentially overthrow it on the NASDAQ, but the S&Ps are not quite touching it yet, expecting to see a touch of that level and then a bigger breakdown. So watching for that. Overall thesis, again, very, very short term, potentially a little bit bullish, but beyond that, expecting a rejection towards the mid to end of the week that could last several weeks after that. So watching those key levels, overall bearish. Let me know down in the comment section what you think of the current geopolitical risk and what are you doing in your portfolios to help mitigate that. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.